When we picture the stock market, we think about the Wall Street rooms with the big flashing screens and the chaos reigning. And we all believe that these people shouting are investors, all trying to get the best deal. But actually they are not. They are stock traders. And this because there is a big difference between a stock trader and an investor. And today we're going to see which are these differences. Hi all and welcome to my channel. I'm Nico and I'm an investor since more than 10 years. And on this channel I share my experience and my knowledge to help anyone improve their finances. And as many others, when I decided to start investing, I didn't know what was the difference between trading and investing. And because of that I made a lot of mistakes which costed me a lot of money. And they all are mistakes that I could have avoided easily. And that's why it is super important that you know the difference. And so firstly, let's see which are the goals of trading and investing. Because for trading, your goal is to buy and sell assets in a very short time. And you do that based on the price fluctuations that the market is having in order to make a profit. Whereas in investing, you're buying assets that will increase their value over the time. And this will generate you more wealth. And as an example, this is the strategy that the greatest investor of all time, Warren Buffett, is doing. And so just from the goals, from the objectives of these two strategies, you see that there is an extremely different mindset. And that's why you need to know what to do for both of these cases, of these strategies. Because if you start mixing them together, you will surely not be successful. And so now, going more in detail with the differences, the first one we have to talk about is the time needed for trading and investing. Because while trading, you have to give constant attention to the market, to the news, and all the price fluctuations that the asset in which you are investing is having. And so this is actually impossible to do it properly if you don't have a lot of time at disposal. And so in general, it's something that is more advised to people that doesn't have any other commitment. Because to all of that, you have to add the fact that analyses are difficult and so time consuming, that every day you have to check what's happening, as well as you must not have any distraction while you're trading. On the other side, for investing, you need a low time commitment. Because for example, I do it once per month, I check my investments and the new investments I will want to do. Because you're looking for the long term, you're not looking for the result on the day. And so to you, it doesn't matter if one day is negative or positive, you just don't need to follow all this news that a day trader has and must follow. And so with this strategy, the most time-consuming activity is actually to understand the value of the company in which you're investing. So all the time is invested really before actually starting the investment. Because after that, you will not need to follow it every day. Secondly, there is the analytical approach. Because for trading, with the technical analysis on the charts and all the news, you're trying to predict the price fluctuation of an asset. And this is actually extremely complicated and, as said before, time consuming. As well as you need a lot of interpretation of all this data and news. And so you also need a lot of experience. On the other side, with investing, you look more at the financial analysis, at the quality of the company. Because you want to understand if the company is a healthy one and also if it's gonna grow in the future, because you want to buy a company that has a value and that will see this value increasing over the time. And so you're looking for the long-term development. And this is actually easier than it seems. You just need to know which numbers to look for and how to treat them. And to make it easier for you, you can watch this video where I have developed a tool that does exactly that. Then we have the time horizon. Because for trading, you're looking at the really short term, which can be 1 day, 1 hour, 1 minute, but even 1 second. And this because you're looking to take advantage of a price fluctuation of the market, which would have no meaning over the long term. And investing is actually on the opposite side of that, because you're looking at a really long term and you might be investing even for decades. And this means that actually these small price fluctuations that the trader is looking for, as an investor you don't care about them. And because of that, also the great power of investing comes out, which is compound interest. Because over the time you will see your investment value to go up and up in an exponential way. And this is what is actually going to bring you exceptional results. And together with the time horizon, it comes the frequency. Because clearly, if you're trading for short term, you will do many more trades than if you're an investor. and you're looking for a long-term investing. And so a trader might do even 100 trades per day, whereas an investor might only do 1 or 2 per month. And now we come also to the most critical part, because the risk factor is extremely different between investing and trading. Because trading is actually extremely risky, because when you do that, you're actually trying to predict the price fluctuations, which are not based on real facts. And so yes, you might guess correctly, but you might get it wrong. And no one ever predicts all the time correctly. And trading, so it's actually a game of winning more than what you're losing, because you're playing with volatility which is not under your control. And so yes, there's people that earn a lot of money about it, and it can go well for some time, but over the long term it's not sustainable. And think that for every trader that made a lot of money, there are 1,000, maybe 10,000 or 100,000 more that lost a lot of money. On the other side, we have investing, which is actually not affected by the volatility of the market, because again, we're working on the long term. And so if you invest properly, following also these principles we're talking about in this video, and you do it for the long term, the risk is actually minimal, because as you can see, the market is always growing over time. It has always done it, and it will always do it, because it's just the development of humanity. Then we also have to talk about taxes, because this is actually an aspect nobody really thinks about while trading or investing. And you have to know that while trading, you have to pay taxes for every profitable position that you have closed. Because actually for trading, the taxation has a huge impact on the profit of every trader, because since it is a short-term gain, the taxation is higher compared to the one for investments. But also you have to consider the fact that at every transaction you make, you will have to pay taxes on it, plus all the different commissions you have to pay. And so actually this way, the compound interest effect that trading could have, it's extremely reduced. And this clearly has a huge impact on the real profit of the trader. On the other side, investing is actually the heaven for money, because you don't pay taxes on the investments as long as you don't close the position. So for example, you might make a $100,000 investment that over the next 20 years, let's say it grows to 10 millions. Well, over these 20 next years, you will not have to pay taxes on it. And so clearly you're gonna pay a lot of taxes on that, but over the last 20 years you haven't paid any taxes on it, and this is what allows also the compound interest effect to work very well with investments. And to that you also have to add the fact that long-term taxes for capital gains are much lower compared to those for short-term gains. And there is also the psychological factor to consider, because it's actually extremely important and impactful. Because trading, since it's short-term, you always have to be focused on the market, on the news, generates a lot of stress on the trader. And in such a situation also you might have a lot of emotions like fear and greed that will lead you to wrong decisions, that when you're making this kind of activity usually means losing money. On the other side, for investing, since you're looking for the long term, and it doesn't matter if today or tomorrow the market goes down or goes up, the stress is much lower. And so once you understand that you're working for the long term, for the long game, you will be able to detach yourself from the daily and the weekly and the monthly results, because you will be confident in your strategy, because you will know that the results will come over the time. And so overall, trading and investing are extremely different strategies, and they should never be mixed. But this is an error that a lot of people really do when starting, when they want to start to invest, and I did the same. But so in the end, the final question is, what should I do, investing or trading? For me, the answer is extremely easy, and it is investing. Because yes, with trading, there's someone that is making money, but it's actually extremely risky and complicated, and you will likely lose your money. And because of that, I would never advise anyone to start trading. And so now that you know that you have to start investing, you also need to know where you can start learning it. And well, for that you can actually just subscribe to this channel and start looking this video. Thank you for watching, and see you soon.